Right, well, I'm afraid it's been a bit of an embarrassment of riches because we're now at an all-time high on that portfolio. At close in the course of this morning, we had hit an amount somewhere around 141,000 Rand mark. So really, the long-only positions flying higher. We decided to close out some of those gains. There are two reasons. Firstly, simply because, as we've underscored many times, when you're involved with CFD trading, you're ramping up your exposure using borrowed money. So you can't fall in love with things. Sooner or later, you've got to book your gains. And also, it's a good discipline. So these are the positions, in fact, we closed out during the course of the afternoon. And Aspen, in fact, was, I think, our oldest and most enduring and most profitable position. So there you go. Billiton, we'd kind of messed around with in recent months. Famous Brands, another one which made us a great gain. And then a number of others. We closed out our short in Harmony Gold, you'll be happy to know. We traded that thing twice, going down. We first got into it at the high 60s, and it's now down at 37.47 is where we quit. And there's the Richemont position I was talking about earlier, where all those combination of factors, it's kind of like we got Christmas in May. We figured, well, let's make every rand a prisoner. And then the last one I want to mention is SAB Miller, because that was a key case where I don't think there's been anything really serious about the stock itself, but it's really been that rand issue. For some reason, amongst all this positivity, the rand is suddenly getting weaker, which pushes SAB Miller, right up to the 516 rand level.
Yeah, I mean, there's almost a re-rating taking place in some of these stocks in the last few weeks.
So in aggregate, the positions that we close out worth that amount, 17,000 Rand. Let's go on to the next slide, which may again be slightly too detailed. It'll show what we still have in the portfolio. So we're still in Woolworths at the top, and down at the bottom, our worst position by far, the African Bank one. Those have got results on Monday, so we're waiting to see what's going to happen there. And there's the overall gain down at 141 or thereabouts. And at this point, we're quite significantly underinvested, you could say, with only about 30,000 rands worth of margin in. The other position I just want to point out is that S&P 500 June 2013 contract. That's the thing that we've only got two of, but you can see it's got a net exposure of 33,000 rand. So that's the point you were making about how those things are very efficient. You can load up with a big position using a very small amount of margin.
Yeah, the margin is what you can see is minute. For 33,000 rands worth of exposure, the margin is 826 rand.
Which is not entirely a good thing, right? I mean, that encourages people to go huge.
It does. I mean, you've got the trader just has to remember that you look at an index price and think of it in the same way you think of a stock price, and make some kind of judgment call or speak to somebody who can give you an idea as to how much these things can move around. I mean, we have all that information available for people. And then you can make a more prudent judgment as to what to do. And if we're looking at a position here where this is a longer term position, a longer term view, you have to keep it under wraps.
And here we're talking about a market index which is trading at an all-time high.
Yeah, I mean, there are rules of thumb about buying highs. It's supposed to be a good thing. It's a rampant market. But the other thing for me is if you look at the actual impact in terms of current value, the actual nominal exposure that those two indices take, it's about almost 50,000. About 20% of their exposure is now in those two, having been taken off elsewhere. So and they're very we know they're ultra liquid in terms of being able to get in and get out of them. But again, pretty happy with that.
What about the platinum thing that we've got in there as well? That's also similarly fairly chunky. It was supposed to be, the idea was that everybody would fall out of love with the platinum miners, but that the decision to go ahead with closures of certain sections ought to create a bit of support for the platinum price. But so far not, huh?
Well, I mean, in a way it has, because bullion tumbled by nearly about $100 or so, or whatever, in the last week or so. The differential between platinum and bullion has opened up quite dramatically, from probably about $30 or $40 prior to the recent incidents at Marikana 2, up to about 90 to 100 now. So although it has come down, it hasn't come off anything like as dramatically. That's good news and bad news. The good news is there's been not so much downside. The bad news is if there is a resolution, and we all hope there is a resolution in that kind of situation, there may be a bit of a narrowing of that differential.
Yeah. One thing, that again is a platinum price without the rand issue. Is there a trading instrument which you can get the platinum and the rand, like maybe a CFD on the new platinum ETF? Yeah,
we now offer the CFD on the ETF that's laying underneath. and that's platinum priced into Rand.
Yes.
This particular one, the platinum July, has a very, very wide spread on it, which has to be crossed in order to trade. So it's quite prejudicial unless you're taking a very, very serious position. It is quite a large step to take, and it's much more efficient to trade the underlying that I mentioned.
Okay, good. Well, that's good to know. Glad I asked. Maybe we can kick that one out and replace it with the other one next week.